Hello friends, welcome to my channel. In today's video, we are going to talk about the latest IPO, which is about Chemcon Speciality Chemicals Limited, which is opening tomorrow on September 21st. Before we begin, if you have not subscribed to my channel, please do subscribe right now, and you can now join my channel membership where we are discussing a lot of latest news, stock analysis, views, market analysis and several things. So I am Varun Agarwal and let's get started. So Chemcon Speciality Chemicals Limited was started in 1988 in Gujarat. It's a specialty chemicals manufacturer. As you know, this particular sector is in good boom and it is valued even more than earlier right now. And this company is mainly into two types of specialty chemicals. Number one is pharmaceutical chemicals. Number two is oil well completion chemicals. So this company does sales in India as well as exports. It manufactures a chemical called HMDS, which is for which it is the only manufacturer in India and it is the third largest worldwide. Another chemical called CMIC, for that it is the largest manufacturer in India and second largest worldwide. So you can see for specific certain chemicals, this company is one of the market leaders globally. These chemicals which the companies manufacture are used in the manufacture of APIs, and the APIs are used to make drugs and medicines which we take in the pharmaceutical industry. The promoters of this company are Mr. Kamal Kumar Rajendra Agarwal, who is the chairman and managing director. He holds a diploma in petrochemical technology and he has 23 years experience in the industry. Another promoter is Mr. Navdeep Naresh Goyal, who is the deputy managing director and has 10 years experience in this industry. The third promoter is Shubhrangna Goyal, who holds a master's degree in political science and English literature. Now let us understand the business model of this company. As you know, it is into specialty chemicals. 57.4% of the revenue comes from the pharma segment. 33.5% of the revenue comes from the oil well completion segment. 40% of the revenue comes from exports and 60% from domestic sales. And out of the total revenue, 60% of the revenue comes from top 5 customers. For me, this is considered to be slightly a negative point because if they lose one of the customers, the revenue could be majorly affected. Now let us understand the market and the industry in which this company operates. The pharma chemical segment, the pharma intermediate segment is of market size to 27 billion US dollars in 2019 and it is growing at a CAGR of 4% by 2023. The global market of drilling and completion fluids is growing at a CAGR of 5%. So both of these segments are growing at a decent rate. Now, why is this company better than the others in their particular field? This company has market leadership in certain chemicals as we have discussed. The promoters are experienced. The company is selling in India and abroad, so it is geographically quite well expanded. And they have long-lasting relationships with one of the biggest pharma companies, as you may remember the names Laurus Labs, Hetero Labs, Aurobindo Pharma and several other names. So this is the advantage which this company has when compared to the other companies in the same industry. Who are the competitors of this company? Aarti Industries, Vinati Organics, Sudarshan Chemicals, Atul Limited, Poshak Limited, Fine Organics, Neogen Chemicals. So these are few competitors of this company which make similar or same products. What could be the growth prospects of this company from here on? They are taking money, they are raising money in the IPO to expand their capacity of production. So that is a growth signal. Globally, they are looking at more expansion. They are looking at introducing more products in their portfolio, and due to the recent movement against the China imports, this company is expected to be benefited because this company will be preferred for making purchases when compared to the Chinese companies. Now let us discuss the risks, because I consider risks in the IPO companies more important to be discussed because these companies are new. We don't have much information or track record about these companies. So we should discuss the risks in more detail and we have to be more cautious. So the promoters have some corporate governance issues in this company which I really don't like. They have been involved in SEBI violations. There is a CBI criminal proceeding going on against one of the uh, key members of the directors, Naresh Vijay Kumar Goyal. Then the products profile of this company is limited, unlike some other specialty chemical companies in India where they have a vast product portfolio. Significant revenue is coming from selected customers, so that is a risk. Business is dependent on certain global factors such as oil exploration activity. So if that particular industry is going down and the exploration activity is reducing, the company's business will be drastically affected. The raw material supply for them, if it is varying, if the raw material is not available, that will be affected. The finished products of this company globally, their prices, if there is fluctuation, then the margins of this company will be drastically affected. Globally, if you see about their oil well completion chemicals, 26.43% of the revenue comes from UAE. So if there is something happening in that particular country, their revenues will be drastically affected. So these are the risks which I felt should be communicated to you before you invest in this IPO. Now coming to the financials part, the revenue of this company in the last 3 years has been growing except in financial year 2020 where it took a small dip from 303 crores to 262 crores. So when you see the financials, you get to know that the company size is small, it is still a small cap company. The profit after tax, unlike the revenue, is growing steadily and it has doubled from 2018 to 2020 from 26 crores to 49 crores. The EPS is again growing steadily and almost doubled from financial year 18 to financial year 20, 15 rupees 37 paise. The net asset value is considerably growing, which is a good sign. The borrowings are growing, which is not really a good sign, but still if you see the debt equity ratio of this company is very less and it is still under control. So that would not matter much. Now the revenue in the last 3 years had grown at a CAGR of 29, profit at 36%. So the financials are pretty decent, pretty good. Industry average PE of this specialty chemicals industry is around 31. But cash flow point of view, this company doesn't have positive free cash flows. The auditors of this company are KC Mehta and Company. Now let us discuss the IPO details. The IPO opens on September 21st, closes on 23rd. IPO size is just 318 crores, so it's a small IPO. Fresh issue is 165 crores. The remaining is the stake sale from the existing promoters. Price band is 338 to 340. Lot size is 44 shares. So if you buy one lot, you would be investing 14,960 shares. The maximum which you can buy are 572 shares, which could be at around 1,94,480 rupees at the higher cutoff rate. Face value is rupees 10, PE is 25.5, which is pretty decent. Allotment will be done on September 28th and the listing will happen on October 1st. The company has recently raised investment from anchor investors like ICICI Prudential Childcare, IIFL Special Opportunities Fund, HSBC Global Investments Fund of about 95.4 crores already. Promoters post the IPO, they will be holding 74.5%, which is as per the SEBI regulations. So objects of this IPO would be they will be investing this money for capacity expansion as we have discussed and to meet the working capital requirements of running the business and for general corporate purposes. So this is about the company. Fundamentally the company looks decent. The growth rate is very good. Promoters are experienced, leadership in certain products as we have discussed. Consistent performance in the last 3 years. The participation from anchor investors has been good. But the company has corporate governance issues and the major global factors may affect the company's revenue. So from my point of view, I feel for listing gains, it could be a good IPO. But from long-term investment point of view, you have to be very cautious and keep a close watch on the activities of the company because of the past track record. And if you are able to do it, this could be a good bet for long term also. So thank you for watching this video. I hope you like it, as I have discussed both the positive and negatives of this IPO. Do subscribe to my channel and consider joining it. Thanks for watching and have a great day.